All right, let's get started. In this section, we're going to draw a map of the entire world an auditor lives and breathes in. We're talking about the big players, the absolute must-follow rules, and yeah, the referees who make sure everyone is playing fair.
Hi everyone, I hope Section 1 on Fundamentals has been well assimilated. We are now going to explore the environment in which the auditor operates. This is a crucial section for understanding who sets the rules and who monitors us. You know, it's one thing to know the basics, but it's another to understand the landscape. This is all about who sets the rules of the road, and just as important, who's watching to make sure we're all staying in our lanes.
So here's the game plan for this section. First, we'll look at the key players out there. Then we'll get into the real cornerstone of it all, trust and ethics. After that, we'll unpack the actual rulebooks, and we'll wrap up by meeting the guardians of the profession, the ones who oversee everything.
All right, first stop, the key market players. And really, when you're talking about the world of big-time auditing, you'll find it's a pretty small club at the top.
And here they are, the Big Four: Deloitte, PwC, EY, and KPMG. Look, this isn't just some random list of firms. This is the entire landscape for large companies. Seriously, think of almost any huge global company you know. Chances are one of these four is their auditor. We're talking about an incredible amount of power and responsibility, all resting on the shoulders of just these four firms.
Okay, so we know who the big players are. But what's even more important is the set of principles they all have to live by. This isn't just some nice-to-have company motto. This is the ethical foundation, the bedrock that the entire profession's trust is built on.
So let me ask you this. If you had to pick just one principle, the single most important, absolutely non-negotiable idea for an auditor, what would it be? What's the one thing that, without it, an audit is completely worthless?
And the answer is independence. It's everything. An auditor has to be, and just as importantly, appear to be completely objective. That means no financial ties to the company you're auditing, no personal connections, nothing, not a single thing that could make someone question if your judgment is biased. You have to be a true neutral party. And this quote says it all, doesn't it? Without independence, the auditor's opinion has no value. It's that simple. If you're not independent, that opinion you sign off on, well, it's not worth the paper it's printed on. Investors, the public, everyone is relying on that objectivity. Take it away, and the entire system of trust just crumbles.
Now, right alongside independence, you've got its partner, integrity. They really go hand in hand. You can't have one without the other. Integrity is just being honest, being straightforward. It's about having strong moral principles and sticking to them no matter what.
Okay, so we've got the players and we've got their ethical compass, but what about the actual rulebook? I mean, auditors aren't just going on a gut feeling, right? They're checking that the company is following a very specific set of rules, kind of like the official language of finance.
Here in France, you'll mainly run into two big accounting frameworks. On one hand, you have the PCG. Think of this as the default French rulebook. It's mandatory for the individual accounts of pretty much all French companies. But then, for the big fish, the listed companies in Europe, they have to use IFRS for their consolidated accounts. That's when they roll up all their subsidiaries into one big picture. And why? Simple. Comparability. IFRS makes it so an investor in New York can look at a French company's numbers and compare them apples to apples with a company from, say, Japan or South Africa.
So let's peek under the hood of the PCG for a second. It's a really structured system. Everything is sorted into what are called classes. It's pretty straightforward. Classes 1 through 5 feed directly into the balance sheet. That's the snapshot of what you own and what you owe. And then classes 6 and 7, those build your income statement, which tells you how the company performed over the year.
And here's a quick rundown of what those classes are. Class 1 is for things like equity. Class 2 is for your big fixed assets, like buildings or machinery. You get the idea. A really common example everyone knows is the bank account. That's account 512. And that little number tells you it belongs in Class 5 for financial accounts, which, as we just said, means it ends up right on the balance sheet. See, it's a super logical, organized system.
So let's recap. We have these giant firms, we have strict ethical codes, we have detailed rulebooks. But who's the referee? Who holds the whistle and makes sure everyone is actually following the rules? Let's meet the guardians of the profession.
In France, you've got two main types of overseers. First, there's the H3C. This is the big one. They're the public regulator, basically the police force for auditors. Their job is to monitor quality, enforce the rules, and they are especially focused on independence. Then you have the professional organizations, the CNCC and the CSOEC. They represent the auditors and accountants themselves. They help write the standards and support their members, but make no mistake, the H3C is the one with the real regulatory power, the public watchdog.
And there you have it. That's the ecosystem we operate in. We've hit the players, the principals, the rules, and the regulators. So let's do a quick flyby of the key takeaways.
Okay, so what do you really need to remember? First, the players. The market is basically run by the big four. Second, the golden rule. Independence. It is absolutely non-negotiable. Third, the languages. We speak two main ones, the French PCG and the international IFRS. And finally, the watchdogs. In France, the H3C is the public regulator making sure the rules are followed. That's the whole map right there.
Okay, so now you've got the map. You know who's who and what's what. You're officially ready to move from the why to the how. In Section 3, we're going to roll up our sleeves and dive straight into the audit approach and the process itself. I'll see you there.